Sell in May and go away. Stay away till St. Ledger Day. And if you're wondering what St. Ledger Day is, good news. Investor Beat starts now. Thanks for watching. I'm Chris Hill. Red lights on Wall Street after a round of new economic data indicated weaker than expected growth in the world's top economies. Merck dragging on the Dow index after the pharmaceutical giant's quarterly earnings fell 14%. Joining me in studio today, Jason Moser and Matt Argersinger. The Dow, S&P, and NASDAQ were all up double digits for the first 4 months of 2013. Those are returns many investors would love to have for an entire year. But the hot start has fueled talk that investors would be smart to follow the old adage, sell in May and go away. What do you think? Is it a good idea this time around?
You know, Chris, it actually might be. There's a lot of data behind this.
Historically.
Really, and there's one report that really stands out to me. You take two investors, both investing beginning in 1960. One investor invests from November to April, the other from May to October. The guy who's investing from November to April, he's up 50x from his initial investment since then. The guy who invested from May to October, he's only doubled his money in 60 years. That tells me maybe there's something to this. I mean, that's 60 years of history right there.
You're not buying this.
No, not at all. I like Maddie's history lesson a lot. But listen, if there are people out there selling because it's May, well, I am really putting my radar on there because that just means prices ought to be coming down on some of my favorite companies and I want to be buying them. So I'm keeping a watch list. I'm looking at some of the stocks I hold in my portfolio. And in May, June, July, if the prices are coming down, the bigger picture still looks great. I'm going to be sweeping in there buying those stocks.
You know that there are some financial advisors out there on the phone to clients saying, come on, you got to get out of this. You got to trade out. What do you say to the average investor out there?
Well, and Jason's absolutely right, and that's what makes it kind of a self-fulfilling prophecy. Stocks might go down in May, and you know if they do, Jason's absolutely right. Keep a watch list of your favorite ideas. When they're down 5-10% just because of seasonality, I guess, get ready to buy.
By the way, St. Ledger Day refers to the St. Ledger Stakes, a horse race in England, dates back to 1776, takes place in September, hence St. Ledger Day.
I was wondering how long you're going to leave us hanging.
Right. I knew
Thanks.
You don't get that on Bloomberg, people. All right, let's get to some of the day's movers and shakers. DreamWorks Animation's first quarter profit fell 39%, but that was still better than expected. Shares up as The Croods approaches $500 million at the box office. Good day for DreamWorks. You want to change your mind?
I don't think so, Chris. Listen, this is a company that is based on hits, and they just don't put a lot of them out there. And there seems to be a direct correlation with DreamWorks' success and Disney not releasing movies at that same time. All right, so as long as they can keep stringing that along, it's fine. But listen, you sell this company after the big hits. You wait for it to come back, maybe buy it again. It's a value-style investment, not one that I'd recommend folks holding on to for long periods of time.
Zillow hitting an all-time high after Trulia came in with record revenue in its first quarter. Zillow reports its own earnings next Tuesday. This is a pretty sweet gig for Zillow. So just a competitor has pretty good earnings and they go up?
Sure. Well, Trulia had really great results. I mean, revenue was up 97%. Unique mobile users, a real strong metric for them, 122% higher than a year ago. Yeah, Zillow reports next week. Zillow kind of follows along. Their business is very much along the same lines as Trulia. That said, I like Zillow a lot better, even though it's near an all-time high. They're the kind of the innovator leader in the space. Trulia is more the imitator. Stick with Zillow.
Even though they use the word Zestimate?
Z-estimate. I like it. I mean, you know.
MasterCard's first quarter profit rose 12%, but shares fell as the company missed on revenue. They're still maintaining guidance, though. So what do you think? Is this one of those buy on the dip situations?
I think so. Listen, it was a very slight miss. And yeah, gross dollar volumes are down a little bit. Some weak spending in the United States. But you got to pan back, bigger picture with this company. There's still 85% of the global transactions take place with cash and checks. It seems absurd, but the fact of the matter is there's this huge market opportunity in front there for MasterCard and its fellow competitor Visa. And so while Visa may be a little bit bigger, I think MasterCard's actually a better company. Our man Tom Gardner is quick to point out that they maintain higher scores on Glassdoor ratings, which means they're maintaining a great culture there. I think it's a buy on the dip.
And finally, Ebix up after the company agreed to be acquired by a Goldman Sachs affiliate in a deal worth $820 million. Ebix provides software and services to the insurance industry. Sexy stuff, Matt, to be sure. But look, this is a long-term winner, but the last couple of years, this stock has not done well.
No, it's been very volatile, suffering from earnings quality questions. I'm not surprised that Goldman's buying this. Goldman's been making some moves in the insurance space lately. What is surprising, though, is the premium, only 18% above where EBIX has been trading the last 30 days. As you can see, the stock is trading above Goldman Sachs' buy price. That tells me there's probably a chance another buyer is going to come in. So look for a higher price, but definitely stay away from this one. EBIX shareholders should be happy that this is being bought and taken out of misery.
All right, that's going to do it for Wednesday. Let's look ahead to the rest of the week. Jason, what's a stock you've got on your radar?
Stock that's been on fire ever since the IPO, LinkedIn. I think we all know the business, at least to a degree. I just love how they make their money so many different ways. They recently just passed the 200 million registered user mark, which I think is very important to note. And the fact of the matter is they're upping their engagement game, and what they've been able to do with their corporate clients is actually raise prices. So it's showing that they're bringing a lot of value to their corporate clients. They keep on growing that corporate client base. I think this is a company headed for big things. I'm looking forward to the call tomorrow.
All right, Maddie, what about you?
Hey, it's Beam, the liquor giant. They report earnings tomorrow. Great brands here, Jim Beam, Knob Creek, Maker's Mark. Liquor's really hot. Brown liquor especially has been really positive. This is a great business with high margins. I'd love to actually see a little bit of a disappointment because I've always wanted to buy Beam. It's just really always been very expensive, and it should be. It's a great business.
We should do some research on this right after the show.
Oh, absolutely.
All right, for Jason Moser and Matt Argersinger, I'm Chris Hill. Thanks for watching. We'll see you tomorrow.